Welcome back to International Finance. I am Andy Kim, your Dr. Finance. And today we are going through Chapter 13 of Eun, Resnick, and Chulun, which is about international equity market. So let's go through the statistical point of view. In terms of market capitalization of the stock markets all around the world, right? See your textbooks, Exhibit 1, right? Exhibit 1. And by far, New York Stock Exchange and NASDAQ, they are the biggest ones, okay? In terms of $1 billion over here, billions of US dollars worth. And then if you look at South Korea, okay, and then because we are studying in South Korea right now, South Korean stock market size, market cap, you see Korean exchange, K, right? It's like 1.4 trillion US dollars right now. Let me write it down over here. South Korea 1.4 trillion. Japan is like 5 times bigger, 5.3. Okay, and then Shenzhen, Shanghai. Let's see, Shanghai 3.9. Okay, 3.9. Shenzhen is 2.4. 2.4. So together they're like 6.3 or something. Then Chinese market is $1 trillion bigger than the Japanese market. Yeah, of course, the population is 20 times of Korea. In Japan, their population is like 3 times of Korea or something like that. Anyway, you can make an interesting international comparison. Yeah, London, do you have it over here? If you look at it, that's LSE Group. LSE Group, 3.6 trillion. Okay, London, 3.6 trillion dollars, like that. Yeah, so you can make international interesting comparison and then have some ideas about the market potential over there. Another thing I missed to mention, right? In Coupang's NYSE IPOs, right? You want to attract a lot more cash and a lot more investment flows coming in, and then get to know yourself, get to make yourself known to the investors more in a bigger market. I told you, right? I say to you, go to bigger market, because there you can, increase and then get the maximum. You can maximize your human capital over there. Not just your human capital, but when it comes to company, your market cap will be a lot bigger, because a lot more investor base will be there for you, and you can maximize your potential a lot better over there. So for Global Business Administration guys and all you guys from international schools together, right? Go to more bigger market, okay? That's my message. And then market cap, yeah, you see that. And then emerging market, Standard Poor's emerging market database classifies a stock market as emerging if it meets at least one of the two general criteria. It is located in a low or middle income economy as defined by the World Bank. If it's investable, market cap is low relative to its most recent GNI figures, the gross national income figures, right? Measures of liquidity, how frequently is it traded in the market, right? Liquidity is an important component in asset pricing. The equity markets of the developed world tend to be much more liquid than emerging markets. They trade more frequently, okay? Trade more frequently. The more frequently traded, the more informationally efficient it is. Better market efficiency is achieved with better liquidity. Say stock by stock. Let's say Samsung Electronics versus DI Corp, right? My good old friend stock, right? DI Corp. Who knows about it? Well, some of you because of Gangnam Style, but almost none of you must have known this DI Corp before. Okay. Samsung Electronics is like a 국민주, everybody holds it, except me, by the way. I should buy one pretty soon, but I think this is overvalued right now. Anyway, the more people buy and sell, busily, that's more liquid stock. Some stocks, they don't get traded once, even once per day. No, nobody trades. Well, in Korean market, we have about 2,200 stocks traded in the market, but some stocks within this 222, right, 100, some stocks never get traded in a day, okay, per day. Nobody knows because, right? That's illiquid stock, illiquid. What's the problem? The information, okay, does not get into that price too often, okay? It's too risky. Yeah, if you take my behavioral finance class, you will learn about that issue later. Liquidity refers to how quickly an asset can be sold without a major price concession. So Samsung Electronics, yeah, price changes, but it's within, right, reasonably small degree. I wouldn't say a specific number of it, but reasonably fluctuating. It's not like boom, boom, like crazy. Because everybody buys and sells and everybody studies that company, and all those important information gets priced immediately as soon as it is announced. So market efficiency holds true for that kind of big stocks. And now what I'm saying over here is equity market versus other market, right? Country by country. Some countries more liquid market is there, informationally more efficient, versus some countries seldom gets traded, okay, within their market, less liquid. So while investment is an emerging market, in emerging markets may be profitable, the investor's focus should be on the long term, okay? And then one measure of liquidity for a stock market is turnover ratio. So turnover, what is that? Well, that's stock market transactions divided by market capitalizations. Okay, stock market transactions and then market capitalization. So out of your market cap, 시총, right? I told you in Coupang's case, market cap is the whole pie of the company, right? Market cap, okay, whole pie. Only 5% is being traded, okay? But over a year, this guy, the traded amount, floated. We say floated in the market. Float. These shares get traded frequently, so frequently that the frequency count or the market transaction amount, right? Floating number of shares times the price per share being traded. If you multiply those things and then add day by day, then eventually sometimes it's going to be more than the whole market cap being traded. Of course, the remaining part over here, the pie, is still in the owner's hand, but how many of these floated shares get changed their hands, okay, for over the outside markets? That's turnover ratio. More frequently traded, the bigger number. And then the higher the ratio, the more liquid the market, more ratios are, turnover ratios are relatively stable over time for most national stock exchanges. Many national stock exchanges had relatively high turnover ratios with over 40% of the exchanges in most years in excess of 30% turnover per month, right? All right, now, if you look at it, see your textbook exhibit 2, right? And then you see, let me go to chapter, what's that, exhibit 2. What I see is a turnover velocity of domestic shares, right? And then concentration of market cap in top 10 companies in 13.2, your figure, exhibit 13.2. This is a 13.2 in 8th edition book. 9th edition, you have 2018 value over here. And then there you will see concentration of market cap in top 10 companies. So if you look at Korean Stock Exchange, let me see, is there Korea Stock Exchange maturities, Luxembourgish, you see, right? Asia Pacific, and then Korean exchange 149.5 turnover percent. That means 1.5 times of your market cap are being traded over a year. Okay, how does that fit into the whole picture? If you look at Japan Stock Exchange, it's like 104. So compared to Japan, right? Korean people are trading more frequently. Interesting. And then if you look at Shanghai and Shenzhen, is like a 130-ish in Shanghai, Shenzhen 244. So it's, Shenzhen is more frequent than Korea, and then Shanghai is less frequent than Korea. So interesting thing going on over there, two different markets. And then how about London Stock Exchange? London, right? LSE, it says LSE Group 55, a lot less. And then, so all those things you can compare across different countries. Deutsche Börse, right? Germany, 80%, right? So the frequency of this trading, okay, is different by the countries. And then the concentration of market cap of top 10 companies. Well, if you look at Korea, okay, Korea is 30% of the whole, 30% of the total market cap of Korean Stock Exchange, about 30%, belongs to top 10 group. Samsung Electronics, and then SK Hynix, and LG Chemical, and Celltrion. Those 10 companies take up this much market cap, 30%. How about Japan? They have 13, not 30, but 13, which means about this much, right? They have a lot of bigger companies, and then it's more, Korea is much more concentrated in terms of economic power. Top 10 companies take up the whole lot of more resources, and the market cap in that sense, right, is much more risky than Japan. Japan is much more diversified, okay? And then let's see, Shenzhen and Shanghai, the Shanghai is like 28%. Shanghai is 28%, close to Korea, okay? And then London Stock Exchange, right? That's 29. Oh my goodness. And then Deutsche Börse, 40%, a lot more concentrated. So international cross-sectionally, we have a lot variation in various aspects like this, right? Much more concentrated in Korea or Germany. And then market structure and trading practices and costs. Primary markets and secondary markets are there. I mean, how do you classify different market in different stock market in different ways? Primary market is when you issue any security. Secondary market is everything else that happens after the primary market. So IPO is a primary market. You issue security, and then initial moment, the stock changes hand from the original owner to newly invited stockholders, shareholders, right? So that is a primary market. You do the IPO. So, and the same idea of primary market versus secondary market applies to all different kinds of security markets. For example, bond issuance, corporate bond issuance. The other day I had lunch with a banker from Ch13, right? Stanchard, right? And he used to work for Morgan Stanley's corporate debt issuance business for a long time, right? And then, you know, he was talking about this, the primary market, secondary market in bond market, right? It's all about the primary market is, spreading your shares and then market this thing to your market your securities to the all different investors, right? Marketing matters, right? All integra, right? So the shares offered for sale directly from the issuing company, right? That's primary market. Secondary market is, provide market participants with marketability and share valuations. Well, it's all about, these investors in the market, they're buying and selling to each other, right? That's a secondary market. And then market structure and trading practices and cost. Some more things. Market order. I guess you guys are experts by now because I know so many of you are buying and selling stocks right now. Maybe you move to coin market. Be careful, man. Too risky. Young blood. Maybe you guys are, more risk on kind of guys, right? But for me, I'm like more risk averse. And I'm old aged, right? 50 years old. What can I say? But in your 20s, right? I was like that, right? Buying stock market and joining there and the risky thing. It's kind of interesting, right? Anyways, the order practice, right? Market order is there, right? Which is an order to your broker to buy or sell share immediately at the market price. This is like what? 시장가 주문, right? Whatever is being traded, right? That's the price I'm going to take as a price taker, right? The market order. And you know, as you buy and sell these kind of stocks, right? There is a bid-ask spread and then bid-ask difference, right? And then there are some limit orders, right? You see 호가창, right? 최유리 호가창's like in Korean brokerage service, they give you 10 levels of different order levels. Limit order stays there. Some investors say that I want to sell my shares above the current market price. But how much? Well, I specify that amount, right? It could be really close. Let's say the market price is, let's say, Samsung Electronics, 88,000 market price. Kazuya, please, baby. But if you want to, you can make a limit sell order saying that I'm going to sell only the price is like 89,000 or something. How many shares? Maybe 10 shares. Okay, some people do it like this. That's limit order, and then your order amount is being sold if this price, the transaction happens above and then hits this $89,001 level. Okay, some people will place their limit order as much as like what, 100,000, which is too much away from the market price. Okay, but the thing is, in Korean stock brokerage service, 10 levels above market price, 10 levels, 1, 2, 3, 4. The closest, 10 closest level of sell limit orders and 10 closest, buy limit orders are shown in real time in your window. Okay, 10. And then that's, limit order, an order to your broker to buy or sell at the price you want. And when and if he can, right? So you place your 100,001 order for Samsung Electronics, right? Samsung Electronics, SEC, right? How many shares? Let's say 40 shares, okay? Well, you can place this limit order early in the morning when the market price is 88,000 only. Then chances are you may end up selling nothing out of it because the market price happens only plus and minus like a 5% of this current market price throughout the day. Okay, but that's what limit order is about. You said I'm not going to sell it if it is below 100,000 won. That's limit order. Equivalent thing for buy order is there, limit order. Okay, yeah, and then if immediate execution is more important than the price, use a market order, right? Usually do market order. Limit order, who does that? Well, some hedge funds do it too, right? Who knows and then believes that they have better valuation about precise value of the company. They're sure about those value. That's why they say limit orders. I'm not going to sell it below a certain price. I'm not going to buy it above a certain price. That's perhaps because you studied enough of the company. Okay, hedge funds, right? Market makers also, they do it, right? Market makers. Just to make the deals going on, right? Right, that's that. Market structure, trading practices and costs. Dealer market is there, NASDAQ dealer market, NASDAQ. The stock is sold by dealers who stands ready to buy and sell the security for their own account in the US, right? And then NASDAQ is a whole dealer network, right? Dealers who keep the inventory of the stocks, right? Broker versus dealer, what's the difference? Whether they have their own book of inventory versus not. The dealers, they have a, used car dealers, they have the used car in their garage, like their sales place, right? Whole lot of inventory is there. That's a dealer. You take the risk of the inventory value. What if the inventory value plunges down like crazy? You're screwed. So you take the risk. That's a dealer. And NASDAQ is a dealer's network market. Okay? And then just electronically connected. Then what? That means like all the electronic networks searches for the best bid and offer prices throughout this dealer's network. Okay? Busily networked market is going on in NASDAQ. And broker, by the way, they don't take that inventory risk, right? No inventory, no book, right? They're just market making. And then once the transaction happens, they are just off. So they don't carry that risk. Anyway, the stock is sold by the dealers who stand ready to buy and sell. Yeah. OTC market is a dealer market. Over the counter. Over the counter market, what the heck is that? We're going to talk about that a little later. But like pink sheet kind of companies or ADR kind of stocks, right? They are over the counter market. If you watch the movie The Wolf of Wall Street, right, by Leonardo DiCaprio, you will see that pink sheet market going on. These brokers keep a list of companies who are bankrupt, who are in trouble or restructuring, being restructured. Those kind of 동전주 kind of things. Once they are in the trouble, they get out of the New York Stock Exchange or NASDAQ, but these troubled companies go into this OTC pink sheet market so that, only a small subgroup of the investors exchange those ideas and orders and buy and sell, right? 동전주, 계좌주 kind of things, or lottery-like stock, or penny stock, right? We say it. That's dealer market. Auction market is an opposite idea over here. It's organized exchanges, and it has specialists who match buy and sell orders. Buy and sell orders may get matched without the specialist buying and selling as a dealer. Okay, it's like essentially New York Stock Exchange system. Okay, New York Stock Exchange historically started with this specialist work, market makers, right? And then this is the dynamic that you see on the New York Stock Exchange trading floor. You must have seen the guy called Einstein of New York Stock Wall Street. Einstein. Let me pull out his picture. Einstein of Wall Street, and this guy. Yeah, right, this guy, right? Very interesting figure. And then he's a most famous guy in Wall Street, and his facial expression tells so much about the market situation of that day. So all these cameramans are, you know, focusing on his face, no matter, you know, about what happened in the market during the daytime, right? The trading session. In his body language tells everything about the market, right? Very interesting figure. And then Peter Tuchman is his name. You can Google search him. And then I am one of his, what is it? I am one of his followers. I'm following him in his Instagram. So you can do that too and get some interesting ideas about, you know, what's going on in the market, right? He once got coronavirus, but thankfully he recovered from that. That's good. Yeah, like this. Anyway, so that's, you know, auction market. But the thing is, New York Stock Exchange, right? Those Tuchman's business, right? Market maker's business is being shrink down. Is already almost gone because of the computers. They are just matching everything. And it's turning into automated exchanges. Computers match by buy and sell, matches buy and sell orders, and then clears the market. Okay? And then what do they do? Like Tuchman's business is whatever is left over, you know, using these computers, right? They're doing busy work, but some part of it is just left over. And then these specialists are still working on how to, you know, clear the market. So that's what they do. Anyway, so the next pages, and then we're gonna talk about it in the next video. So thanks for watching and see you.